Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Nur Safitri. I am from Management Study Program, Faculty of Economics, Universitas Negeri Jakarta. The Honorable Mr. and Mrs. Lecturers, and also Mr. Gatot, Nazir, Ahmad, and Mrs. Sholatia Dalimunthe as advisor. Well, in this occasion, I want to present in front of you my research proposal about comparative analysis of premium income, claim expense, underwriting result, risk-based capital, and its effect on insurance profitability in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. So there will be three sections in this presentation. The first is about introduction, the second is about theoretical study, and the last is about research methodology. So I will start from the introduction. Well, in the introduction, I will give you explanation about several things. The first is about background. The next is about problem formulation. The third is about research purposes. The fourth is about research motivation. The fifth is about research use. And the last is about research contribution. Well, I will start with the background. Well, the background in this research is because I thought that the development of the insurance industry in Indonesia has a very important and significant role. This is because the insurance business can provide self-protection for the community. So its presence is very much needed in the midst of this full of uncertainty situation. On the other hand, these developments have naturally shaped a competitive climate among insurance companies that encourage them to improve their performance in order to complete and increase the company profits. And you can see in the picture, there is a very fluctuative graphic about the profits of the insurance company in Indonesia. Well, nowadays, guys, there are a lot of insurance companies in Indonesia actually. So how to assess them? Is it good or bad company? So to assess the good or bad performance of a company, it can be measured by the profitability ratios listed in the company's financial statements. One of the profitability ratio measurements is return on assets. Well, ROA is one of the indicators that is often used to measure profitability because ROA is a comprehensive measurement indicator to see the state of the company based on existing financial reports. So what are the determinants of the profitability in an insurance company? Several determinants in the financial statements can be used to see their effect on the profitability of insurance companies. These determinants include premium income, claim expense, underwriting results, and risk-based capital. These four determinants can be taken into consideration to find out which components of the financial statements have an influence on profits, so that the company can further review its performance in order to obtain maximum profit. Well, based on the background described above, through previous studies with acquired diverse results, the researchers are interested in conducting further testing of the comparative analysis of premium income, claim expense, underwriting result, risk-based capital, and its effect on insurance profitability in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. Well, from the background above, I have some problem formulation. There are 5 problem formulation in this research. The first is, does premium income affect the profitability in insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The second is does the claim expense affect the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The third is does the underwriting result affect the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The fourth is does risk-based capital affect the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. And the last is, are there differences in the effect of these four determinants on the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines? Well, the next is I will give you explanation about my research purposes. There are some purposes on this research. The first is analyzing the effect of premium income on the profitability of 100 insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The second is analyzing the effect of claims expense on the profitability of 100 insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The third is analyzing the effect of underwriting results on the profitability of 100 insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. The fourth is analyzing the effect of risk-based capital on the profitability of 100 insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. And the last is comparing the results of the influence of premium income, claim expense, underwriting results, and risk-based capital on the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines for the period of 2016 to 2020. Okay, the next is about my research use. There are two use of this research. The first is about theoretical use and the second is about practical use. For the theoretical use, I thought that this research is expected to be a source of information, of course, to add insight and knowledge and can be used as a reference for the further research. For the practical use, I hope this research is expected to provide benefits for all interested parties and related to the object of research, including the government, companies, communities, and also me as the authors. Well, before I start this research, of course, I have some motivation, or I hope that this research can have some contribution. Well, the next is I will give you explanation about motivation and contribution of this research. Okay, about motivation as a source of information regarding what factors can affect the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines, and the contribution. I hope this research can contribute in the theoretical, practical, and policy fields in Indonesia and of course for the Southeast Asia. Well, I think that is about my introduction of this research. The next is I will give you some explanation about theoretical study of this research. Well, there are some subsection on the theoretical study part. The first is conceptual description. The second is about previous research. The third is about conceptual framework, and the last is about hypothesis formulation. Of course, I will start from the conceptual description. Well, before we go any further, I will give you some explanation about what actually insurance is. According to C. Ahmad, 25, insurance means to underwrite something that may or may not happen, which is then associated with coverage related to one's life problems. Beside that, according to the law of the Republic of Indonesia number 40 of 2014 concerning insurance, insurance is an agreement between two parties. The first is insurance company, of course, and then the second is insured, which is the basis for receiving premiums by the insurance company in return for providing reimbursement to the insured. Well, there are some type of insurance business which is different between the Indonesia, Malaysia, and Singapore, or even Philippines. For the Indonesia, there are three types of insurance business. The first is non-life insurance, the second is life insurance, and the last is reinsurance. It's well, in Malaysia and Singapore, there are three type of insurance business. The first is life business, the second is general business, and the last is reinsurance. While in the Philippines, there are five type of insurance business. The first is marine insurance, the second is fire insurance, the third is casualty insurance, the fourth is suretyship, and the last is life insurance. Well, these are the type of insurance business in the four of country in Southeast Asia. Well, let's talk about the variable of this research. The first is I will start with the profitability. According to SARI 2020, profitability is the company's ability to generate profits with the sources owned by the company, such as assets, capital, or company sales. Several proxies in measuring profitability according to Ramasubian 2019 include the first is return on asset, the second is return on equity, the third is earning before interest, tax, and the last is profit margin, which are gross profit margin and net profit margin. Okay, the next is about independent variable of this research. The first is about premium income. According to Prahasti 2020, premium income is the amount of money paid by the insured to the insurer, which is insurance company, for recompense by the insurance company in accordance with the agreement. And there are several types of insurance premiums according to INARSO 2014. The first is original of premium. The second is spatial rate of premium. The third is spreading of premium. And the last is total sum insured. So what about claim expense? According to Maharani and Fairley 2020, the claim expense is the number of costs incurred by the insurer, which is insurance company, on the basis of liability to the insured. There are two types of claims. The first is total loss claim, which is claim whose amount is equal to the sum insured, and the second is partial loss claim, which is claims that are less than the sum insured. Well, here is about underwriting result. According to Purnawati 2019, underwriting is the process of assessing and classifying the level of risk possessed by a prospective insured or a group of people under coverage related to the certain insurance products and making decisions to take or reject risks. Wow. According to Sastry 2017, underwriting results are the difference between underwriting income and underwriting expenses. Well, let's move to the last independent variable on this research, which is RBC or risk-based capital. About definition of RBC, according to Sayakti and Santoso 2020, RBC is an insurance company's health ratio based on its solvency level. The following are the previous regarding the minimum level of RBC in each country. In Indonesia, it's 120%. In Malaysia is 100%. In Singapore, this is same. In Indonesia, 120%, and the last is Philippines. It's the same with the Malaysia, which is 100%. It's actually there are different regulation about RBC in each country. Okay, the next is I will show you about previous research. So here are some previous research that I take and that I use for my research. Well, from the previous research, I made some conceptual framework, which is the first is effect of premium income on the profitability of insurance companies. According to Crasiat 2019, premium income can generate significant financial returns, which have a positive impact on the profitability of insurance companies. Well, the second is the effect of claims expands on the profitability of insurance companies. According to Nadia 2019, the premiums paid by customers to insurance companies contain an element of risk that can trigger claims so that the higher premiums obtained. The greater claim expense will result in a decrease in profits. The next is the effect of underwriting results on the profitability of insurance companies. When the underwriting income at an insurance company is able to cover all of its underwriting expenses, there will be excess funds called underwriting results and will affect the company's total profits. It is according to Punawati 2019. And the last is the effect of risk-based capital or RBC on the profitability of insurance companies. According to Narayan 2019, in Pramestika 2019, the tendency of increasing RBC is an indication of better capital adequacy for insurance companies. So here are some conceptual framework of this research. Okay, you can see in the picture, this is the conceptual framework of this research. There are 4 independent variables that affecting the one dependent variable, which is profitability. From some explanation about the theoretical study on this research, I have some hypothesis formulation. There are 4 hypothesis formulation on this research. The first is there is a positive influence or effect between premium income on the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines. The second is there is a negative influence between claim expense on the profitability of insurance company in Indonesia, Malaysia, Singapore, and Philippines. The third is there is a positive influence between underwriting results on the profitability of insurance companies in Indonesia, Malaysia, Singapore, and Philippines. And the last is there is a positive influence between risk-based capital or RBC on the profitability of insurance company in Indonesia, Malaysia, Singapore, and Philippines. Well, next is I will give you explanation about research methodology. In these sections, actually, there are some subsections. The first is object and scope of research. The second is research methods. The third is variable operation. The fourth is population and sample. And the last is data analysis technique. Well, I will start from the object and scope of research. Well, the object and scope of this research The first is about the objects. The objects in this study are insurance companies in Indonesia, Malaysia, Singapore, and Philippines are listed on the Indonesia Stock Exchange, or IDX, or Central Bank of Malaysia, and Monetary Authority of Singapore, and then the last is Insurance Commissions in the Philippines. And this research was conducted with a span of 5 years, starting from 2016 to 2020. About research methods that I use in this research, the method used in this research is associative research method. This method is used with the aim of knowing and explaining the causal relationship between the independent variable and the dependent variable. And the analytical technique used is a quantitative analysis, of course, because this is about the financial statements, the or annual report of the insurance company. And the data used in the study are secondary data, of course, obtained from financial statements or company annual reports. Well, it's like what I said before, there are independent and dependent variables in this research. And for the independent variables, there are 4 variables. The first is premium income, the second is claim expense, the third is underwriting results, and the last is RBC. And for the dependent variable, it is profitability of insurance company in Indonesia, Malaysia, Singapore, and Philippines. Well, I think the next is about formula of each variables on this research. There are profitability, premium income, claim expense, underwriting results, and RBC. You can see. Well, the next is about population and sample. The population of this research is all insurance companies in Indonesia, Malaysia, Singapore, and Philippines listed on the IDX, Central Bank of Malaysia, Monetary Authority of Singapore, and of course, Insurance Commission in Philippines during the 2016 to 2020. And the sample is, I use the purposive sampling method. After I classifying the population, well, I get 100 insurance companies that I use as a sample in this research, which is listed on IDX, Central Bank of Malaysia, Monetary Authority of Singapore, and Insurance Commission in Philippines during the period of 2016 to 2020 period. Okay, after population and sample, I will give you explanation about my data analysis technique. Actually, I use the panel data regression, of course, because my research, my data, my population or my sample is consisted of several companies, which is cross-section and over a period of several years. It means time series. So I use the panel data regression for this research. Furthermore, the data that has been obtained will be processed and analyzed using the program of Stata 15. And the stages of data analysis that will be used are descriptive statistics task. The second is classic assumption. The second is classic assumption task. The third is estimation model approach, and the last is about hypothesis test. Well, I will explain from the descriptive statistic test. For the descriptive statistic task, describe data that is seen from the mean, minimum, maximum, and standard deviation. And about classic assumption test, there are maybe 4 stages in this in this section, in this part, in this level. The first is normality test. The second is multicollinearity test. The third is autocorrelation test. And the last is heteroscedasticity test. Well, I use these 4 stages of the test in the classic assumption test. Well, the next is about estimation model approach. There are several data processing techniques in the panel data regression model, including OLS or ordinary least squares, fixed effect, and random effect that can be determined by testing Chow test and Hausman test. There is a HO and HA in the Chow test or Hausman test. About Chow test, HO is model common effect and HA is model fixed effect. While for the Hausman test, HO is model random effect and HA is for the model fixed effect. Okay. The last, I think, is about hypothesis test. It's like what I said before, that I use panel data regression analysis on this research. But before this, I will do a coefficient determination first. Then I will use the panel data regression analysis, and then the last is about hypothesis test or t-test, which is this is about partially test in this research. The t-test or partially test is basically about how each independent variable can affect the dependent variable, which is premium income, how it can influence the profitability or claim expense on the profitability, underwriting results on the profitability, and the last is about RBC on the profitability. Well, I have 2 types of hypothesis tests in this research. The first is if the significant value is less than 0.05, then the hypothesis is accepted, which is significant regressions coefficient. Or if the significant value is more than or higher than 0.05, then the hypothesis is rejected, or regression coefficient is not significant. Okay, well, I think these are things that I'm going to convey to you all. Thank you so much for your attention. Thank you for watching this video. I hope you enjoyed this video. Wassalamualaikum warahmatullahi wabarakatuh.